Hello, everybody. Thank you for joining me. My name is Stephen Choi, and this is Trading with Livevol. And this is where I trade my real Reg T account, and I use LVX so you guys can see how I trade. So let's go to my account. So you can see I'm having a pretty bad day here, and that's because I bought those weekly Apple calls. I think I told you guys about it. It was kind of not anything to do with the software. I just bought them because I thought it was going to go up, and it's incorrect. So looks like I'm going to take a pretty big beating in my account. Now, usually, you know, the frustrating thing, I think, what I'm kind of learning how this is as a Reg T account, and what I'm doing is like I said before, it always seems like I have to learn it the hard way. But when I was trading on the floor, I guess like a difference of 15,000, because that's how much I lost since I began. It was really nothing. It was almost like a rounding error, right? So my account could fluctuate, 20, 30, 50,000 a day. And making a bet of 5,000 on something wasn't that big of a deal, but I'm actually understanding I can't do that. So normally, if I was going to take a shot in Apple, what I would do is I would take the shot right here, but then maybe I would sell some straddle or something to try to recoup it, which I can't do with this account. So I'm learning. Because I'm still buying like I did before, but I'm not selling as much as before, which isn't good. So I'm gonna have to adjust, figure it out. Looks like I have probably about 1,200 more on this to lose. I was gonna cut it off before, but I just didn't. And then when I turned around, like this Apple dropped quite a bit, and basically it was to the point where it was like less than $1. So I was like, well, I'm just going to keep it, right? So for now, I'm just going to keep it. I might sell it at the end of the day, but my thinking is most likely this is going to be just a loser, but I'll see how it goes. Most of the other trades, interesting enough, maybe this is like even a better commercial for the software, is so all the stuff that I was doing kind of on my own isn't. So I'm really bullish in Zynga, and that really hasn't turned out because it's just going down. And this Apple trade isn't working, but all these other trades I've been kind of doing have been doing a little bit better. So let me actually. So basically, that Apple is the cause of my pain right now, and most likely, maybe I'll have 30,000, and I'm thinking I'm gonna have to change my strategy a little bit to account for the fact that I don't have like $1.5 million account, and I have all this leverage. So if I buy $5,000 worth of premium, I just go somewhere and sell 5,000. So I'm gonna have to do a little bit better in terms of managing that stuff. I think for me, one of my I guess if I had to rate myself, one of my negatives is I'm very impatient. So I guess I saw that 50,000, and my thinking is, you can actually make quite a bit. So you can, even with that 50, I know how trading goes, and you can really increase your returns very rapidly. So that kind of got me impatient instead of doing it the long way. So basically, by the fact that my account is down to this amount, I'm basically reduced to having to do and maybe grind it out, and in the long run maybe it's better. But for now, that's what I'm doing. So one of the things that I think I did learn is I really don't let these kind of things affect my future trading as much. So one of the things I learned greatly from the guys who kind of mentored me was that don't let your past trading affect your future trading, right? Which is not easy to do when you're losing. So it took me a while to get used to it, but I'm I'm pretty much I am pretty much used to it now. It's almost like that part is almost on autopilot. Obviously, I have to do it a little bit differently because my account is smaller, right? But one of the things that did come up is this DFC Global Corp. So, I was like mentioning how all these calls were trading, and then yesterday I did a little research after everything, and I found out that this company was actually getting bought out for $9.50 on April 2nd. I think it was for like total, including debt, about 1.3 billion. And what happened is that the shareholders weren't too happy about it. So I think there's all kinds of, lawsuits happening in this company on the shareholders' behalf, which, just to be clear, is not that unusual. It happens quite a bit. A lot of times what happens is if the price is too low, a lot of times they adjust the price. But for whatever the reason, you can see even there's no reason to buy the 10 calls if everyone thinks like the deal's going to get done right here at $9.50. But you can see how everyone is piling on these calls, and if I click on this right here, you'll see how 28,000 traded yesterday, and today there's 20,000 open interest on the May 10 line. On the July 10 line, 31,000 traded yesterday and 22,000 open interest. So people are piling on these things. Now, this kind of trade used to be one of my favorites. So normally, what I would do is I would do two things. One, I would actually sell all these front month calls. So I would sell a lot of these front month calls and literally buy stock one-to-one. So because I feel like there's probably more upside in the stock left, I'll sell these calls and just turn them into a buy right. So synthetically, I would be selling puts, right? So if I buy stock and sell the calls, that's what I would do. And I would buy the back month options and sell the front month option, and hopefully like by May 17th, they didn't get anything resolved. So I would do both strategies. Here, I can only do one. So I can't go in and just start buying like 20,000 shares and then selling 200 calls. Like that would be my normal thing, and my thinking would be like, oh yeah, I'll just write the stock up and I'll collect on the calls. But the chances of that happening, well, I can't do that now with the leverage. But I can do this spread. So today I bought the July 10, May 10 call spread for $0.10. And then I bought the October 10, May 10 call spread for 20 cents. So I basically bought those call spreads. So I see some shouting back there in the control room. I guess they restarted this thing, but basically, yeah, that's what I did. So I saw this happening. I'm gonna read more as it goes, but I did this spread, and my whole thinking behind it is, yeah, it doesn't cost me a lot to have this spread. So the most I can lose is the dime and 15 cents. And if this thing goes, let's say, basically they don't resolve it by May 17th and they still continue, you have all these calls for free or for a very low price, and then you can sell some out, right? So, or it can maybe they come to an agreement for a higher price after May 17th, then also these come into play. So I saw these trades yesterday, I saw them trade today, and then I figured like, hey, I'll do this trade, I'll do this call spread because it's kind of what I do, buying like cheap options, and what you're doing is you're hoping that these things go out worthless, and then these things come into play, and you have some upside. So we'll see what happens. the thing that's really good about this kind of play is, if they had leaps, I would try to buy some leaps as well. But if for whatever reason, let's say the deal gets scuttled, right, and they don't go with the deal, the volatility on those leaps will explode. So let me just kind of go to the chart. You see how this red line is the implied IV30. You see how it got crushed as soon as they announced it, right? So, and I'm going to show the 360 days. So these would be a leap vol. So you know how it was 69, now it's 31. So if this volatility actually went back to 68, even if DFC Global dropped like 10% because the deal got basically scuttled, you would actually gain a ton of money just from the volatility going back to the mean. So that has happened to me a few times, and so just generally these kind of trades are really good because I feel like it's low risk and you have the potential to do really well. So let's say whatever May 1st is their earnings announcement, let's say they blow it out the water. I mean, I don't know really that much about this company. It looks like it has a lot of debt, but let's say they blow it out the water and maybe the 950 is no longer in an issue and they can't really get it through the shareholders. This could easily force either the company to have a higher bid, receive a higher bid, or basically kill the deal, which will make all these options revert back to the normal volatility, which is pretty much twice as high as what it is right now. So that's a pretty good trade. I like it, so that's why I put it on. I actually have more working, but the one I'm working now is I'm doing it for 11 cents. So October, May, I probably won't get filled, but I already got my 40. So now I'm doing it for a really good price. Otherwise, I'm not going to really worry about it. So I want to talk about a couple of the stocks. So because I'm running out of margin, I have to actually take care of some stuff. So you see this April 23 calls. I sold 10 of these for 85 cents because I thought the Russian ETF was going to pretty much just like calm down, which it has. But that 10 lot that I sold took up 5,000 in margin. So I bought them back for 40 today, and then I'm going to try to get out of these calls for a dime as well. So I'll just close this position. I made a little, maybe 400 bucks. Since I sold the puts at 85 cents, I'll just walk away with it and just put it in my pocket. The other one is this EEM, which is the emerging market ETF. So, I'm still trying to develop something where I'm selling like some kind of like pseudo condor or strangle, but maybe not together, right? So you kind of like use the trading range and the volatility and the order flow to kind of sell options on the indexes so you can try to benefit. What do I mean by that? I mean by like you see how like this the volatility is low here and high here. Depending on whether it's high or low, maybe you can sell put spread or sell a put or sell a call, right? So if you look at it here, if I sold a put right here, who knows? Maybe it looks like you would have done okay, right? Because a month later it's trading the same. If you sold a call here, you would have done okay. And then if you sold a put here, looks like you would have done okay. Now, as you can see, it's not like you start making money right away. You see how this stock went up? So if you sold a call right here, you would have had some pain with this EEM going up, but then it would have gone down, right? So you would have made your money. Same thing here. So I was thinking like, hey, maybe that's the way to go, right? So right now, it's a pretty low vol. So maybe the strategy is at this point, right? You see how it's at kind of at the bottom range in the past year. Maybe the play is to sell some calls. The only problem is that the margin, right? So I have three calls. I bought back my puts, right? So I had puts as well, but I bought them back. I think it was actually the May puts or something. But I was thinking, what I'll do is I'll sell some more calls, and then when EM goes down, I'll sell the puts or something, right? So I'll just play this range of EM. Let me actually punch it up. Right, so you see how it was in this upper range, even though it rolled it up. So you could have, theoretically, I sold it here, like here. So basically, I've been losing, and then today is the first day I made, right? But basically, maybe the strategy is like to do that. I can even use the weeklies. Maybe that's a better one because, but you see how like maybe 42 here would have been the top. So maybe at this point right here is when you actually sell the biggest amount, and up, maybe here you just sell a little bit, and then when it starts going down over here is when you sell the put. But it's something I'm still working on, but it seems like some kind of selling the strangle, but in a not like just doing it together, but in some kind of like control fashion where you actually like taking a directional and a volatility bet at the same time might be a good way to go. So obviously to me, selling the put is the best one because by selling the put naked when the volatility is high, you're kind of like selling vol and like so right here, you're selling vol and you're being bullish, right? So after 1 month when it went up, you probably had a pretty good gain. But even if it went down a little, as long as it didn't keep going down rapidly, you probably had a pretty good gain because the volatility, as you can see here, went down from 34 to like 25, right? So it lost like 33% of the vol, which makes it probably a pretty decent bet. To short it. So I'm still working on that. I think there's actually a lot of potential in that. I just haven't perfected it yet. And plus, with a Reg T account, it's going to be a little more difficult. But I think generally, like some kind of strategy like that might be a good way to go using the volatility and the order flow information. So for me, the stats-wise, you see how many puts are traded versus the calls. This might be like the first indication, maybe the run is over, but in the end, you kind of, if you look at the net, it's still net positive delta. So you can almost make a case that people have been just selling puts on the bid more than anything. But using the order flow, using the chart, and using the volatility, you can actually come up maybe with a good strategy to sell vol consistently, and maybe that's the way I'm going to use that amount of income to take my shots on the long side, right? So there's a couple of stocks that came up. One was this stock right here. So this stock, VALE, let's see what they do. So they're Brazilian-based metals and mining company. So they do bulk metals, iron ore. So they're basically a mining company. But the thing that interested me on this trade was, and I got this on this one, by the way. So let me actually, just so you guys know how I got it. I got it through this, the watch list trades. I would show it to you But the thing is, I actually trade on another computer, and when I turn this computer on, basically the watch list starts new. It doesn't like do it for like since the beginning. So it only lists what I was trying to do as soon as I turn it on. So it doesn't have VALE in it, but that's how I found it. This watch list trade, and basically it tells me every trade that happens that's 1,000 contract or more. It's my favorite scan, even though it's actually not a scan, right? This one is like ticking, like live, and I can see it, right? So this one, like AGO, April 19, 27 calls. And sorry for skipping around, but I want to illustrate this real quick, and then I'll get back to it. So you see this print right here that just happened. Somebody bought this for 6 cents 1,000 times. Not that it makes that much of a difference. It might or might not if you trade AGO, but that's how I get my info. So I saw that in VALE, right? So I look at the stats tab, and I see that this guy is selling like it's like 3 to 1, right? So he's selling 3 of the 14.5s and buying 1 of the 15 calls 1 week out. It's a 1 week spread. He's actually doing it for credit, right? 11-cent credit almost, because he's selling it for 7 3 times and then buying it once. It's kind of like the trades I like. I look at the stats. There's a lot of call buying. I look at the chart. You know, I can see this thing going up to 15.5. But maybe not 15.5 by tomorrow, because that's when those options expire, right? So I see this kind of trade, and I'm like, yeah, I like it, right? So maybe I'll do that. But the problem is, can I sell 3? And the answer probably is probably not, right? So I'm gonna, I could only probably do like 1 by 1 almost, right? So normally I would do that. I would do it in a ratio. So this is another time when like my reg T is kind of hampering what I'm doing, because just 1 week away, and what I'm doing is like the max loss here is 50 cents, right? Because I'm selling the 4.5s, but I'm buying the 15s, right? So let's say I did that 10 times. I'm gonna punch it in right now, and I can probably do it for 2 cents. Now, I'm really tempted to do it like 20 by 10 because I'm with this guy that it's not going to trade above 1460 by tomorrow, right? So I'm taking 1-day risk, and I'm saying it's not going to trade above it, but not sure if I can actually do it or not, right? So let me actually... I'll do it. Yeah, so I'm still trying to decide. Should I do it 1 by 1, or should I actually do it 1 by 2, right? Maybe the best thing is to do it like 10 by 15 or something. Like 2 by 3 kind of thing, right? So I'm going to try that. I'm going to try it. I know for a lot of you guys who are don't want open-ended position, this kind of thing just sucks for you to put on. But you know, for me, I was kind of okay with it as long as it wasn't like gonna blow me out, right? So I do 3 of those, and I'll do 2 of these. So what I do is I actually pull up the complex order ticket and I click on it. So I clicked on it 3 times, 2 times, and then I'll do it 5 times, right? So if I do it on the bid, so I'll pay 10 and sell 8, I can do it for 4 cents credit. So I'm going to do it for, I'm going to try to put it in for 5 cent credit, see what happens. So what I'm doing is I'm going to try to pay 9 cents, and then I'm going to try to sell these for 8 cents, right? I'm going to send the order right now. boom. We'll see if it gets filled. If not, by the end of the day or end of this this broadcast, I might just go in and say, you know what, I like this trade. I'm gonna put it on. So I'm gonna basically buy these for a dime, and I'm gonna sell 2 of these for 8 cents. And then so every or I'll buy those 1 time or 2 times and sell this for 8 cents. So that's 24 cents I'll be collecting. Here I'll be paying 20 cents. So I'll get 4 cents in return every time we do that. I'm gonna do it 5 times. So I'm gonna collect 5 times 4, which is 20 bucks, which is pretty much nothing. But what I'm excited about is maybe owning this for free if I can get away with it for 1 day, right? So you see how it had a pretty big day. Today it's kind of like halted, and what you're trying to do is have it not rip through. And a lot of times, like, it could rip through. If it ends in the money, you just buy it back and then you just sell the appropriate amount of the 15 calls if you still want to do it cost neutral, right? So you have flexibility. It's not like you have to have it not go above 1450 or your strategy is done. You just have to adjust to it and then take care of it tomorrow. Right? So that's something I saw. I kind of liked it, so I'm gonna put it on. GM also came up on the radar just before I came here, and the reason it came up was this thing right here, the June 38 calls for 71 cents, right? Now it says it's a spread, but I couldn't find the other part of it. So it says it's a spread, but usually there's a timestamp, and then there should be an equal amount of 2,500 that trades at 11:46. I couldn't find it, so I don't know why they tagged it as a spread. But what I do like is I kind of like this trade in general, right? So I think when I look at GM and all the testimony, a lot of the price has been baked in my opinion. And not that I'm a fundamental guy, but in my past, anytime like companies have these like issues, and GM's issues is even less material because it happened in the past, and they might actually be protected because they went through bankruptcy, right? And it's not them, it's the government that gave them that bankruptcy protection language. So it's almost like they might not even be that liable unless they are willing to pay. And if they are, they're not going to do it to jeopardize a company. So I almost feel like, maybe this is a like a short-term bottom. And from here, maybe it might go up, right? So you see how like there's been support here for a while, for a year, and then if you can see, it's like it's been pretty steady since last year. This price right here. So I like that. I like this trade. So how do I do this trade but not pay 70 cents is what I was thinking, right? So I like this trade. So let me actually go to June. So I like this paying 71 cents. You can see it's actually higher, right? It's probably gone up since he did that trade. But I also don't think it's going to just go up like tomorrow either, right? So I don't think it's going to go up to here tomorrow. So I think I have some time, so maybe I can do some kind of spread. The spread I was maybe thinking about was, so they have earnings coming up April 24th, right? So I can sell this before, but it's only a nickel, so it's not that much. Maybe this is the right spread to sell, right? So I would like to do that. Now, normally I'll do it a ton because I like it already, but because of my account situation, I'm going to have to do less. I'm just going to have to live with it. Once my account gets bigger, I can do more. But for now, this is what I'm going to do. So I'm buying the June 38 calls, right? And I'm going to sell the the April 38 calls. Now, you see here, this is pretty interesting. Somebody is actually selling the June 44 calls. So the guy who bought this maybe is selling this to decrease this percentage, but they're thinking like there's no way GM's going to go above 44 by June, right? So this is almost like, in his mind, free cash as long as he owned this. So for those of you guys who don't want to do that spread, maybe this is a spread you do, right? So you have different options when you own this. You can actually sell this, or in my case, I like to do time spreads because you know, April. If I sell April, so my whole idea of this is, so and let me actually make it longer. So you see this 38 line is here, right? So I'm selling this call short term, and I'm buying this call in the back month. So if GM kind of does this and keeps going up, my calls that I own in the back month might stay the same or might appreciate slightly, but these will just start going out worthless, right? Which is a good strategy. So basically, not only are you not losing money on the calls that you bought, but you could actually get paid to own those by time it comes down where that month isn't in play, right? So if you do, let's say you sold the Mays, right? Let's say you sold the Aprils, the one that I'm looking at, right? Let's say you sold these. Yeah, the April 38s for like, I don't know, 22 cents, right? Let's say after earnings, GM fails to get above 38. Now you actually collected 22 cents, but if GM went up, these puts that you own in June 38 might actually be higher, or it might stay the same, right? So you'll offset the decay, and then by the time this GM goes to like 36 or 37, you can actually start selling the weeklies against it, and then you can try to make that back, right? So I like that idea. So I'm 72, 32, 51 cent is the middle. So I'm gonna buy 2 instead of 100. But you know, it is what it is. So looks like if I pay 72 and 22, more like 73 and 22 might work, right? So 51 cent might actually be working. So I'm gonna send that order right now. Boom. Okay. So for those of you guys who are like, well, how do I generate ideas? Well, a lot of people, there's scans, and we have plenty of them. You can even build your own scans here, right? So you see, like, we have tons of factors. So you can use like 52-week high. You can use volatility, and then you can say, hey, minimum like 50, you know, 20, and then you actually execute a scan, and hey, here you go. You can actually do scans, a customized scan, and then save it, right? But the thing is, like, these, look how much variables you have. So for those of you guys who are not that familiar, right, like IV30 open, sigmas, this would be very tough to kind of navigate across, because if you have a hard time understanding what a put call ratio is and a conversion reversal, this kind of stuff is really difficult to actually put in there, right? So, but one of the things that you can do is we have set scans that you can use, or another way you can do it is actually, so a lot of times these set scans, it's not that complicated. You kind of look at, you see this DFC Global right there. It's pointing at it. You can check it out. You know, you see Corning right here, and you're like 104,000. What's going on? Well, pretty easy, right? They have a dividend. So when the dividend is there, there's going to be always a lot of calls traded if there are enough open interest, because market makers are trying to take advantage of the fact that people are not going to exercise calls that are in the money and that should be an exercise, but they're not going to exercise them. Either they don't know, or they don't have money in the account to turn it into stock, and basically the the professionals can actually take those options and get paid on the dividend for that one day. So I'll explain it one time down the road, but for now you can see a lot of different trades here that you can see. So yesterday, I did a trade in Arch Coal because I saw these trades happening. Right, so the 6-7 call spread, you see these 20,000 open interest. Somebody bought it, so I'm gonna piggyback it because I kind of like it. I didn't do it a lot because my viewpoint wasn't that strong, but I just wanted to kind of illustrate and keep track of it so I can kind of talk to you guys. A lot of times if I don't trade it, I kind of forget it then a few days later. So those are the two trades that I'm working on. Does not look like I got filled on VALE, right? In fact, this is like 6 cents now, so I don't know what the hell happened. So 10 and 7, what is that, 14? So I'm going to change it to 4. All right, so that's, yeah. So I'm going to change it to 4 and I'm going to send it out. I probably should have just taken it when I had the chance. But again, like, I'm not like the most patient guy out there, and I'm trying to exercise more patience. But anyway, that's that. And the GM I'm working on. So I'll let you guys know tomorrow if I get filled. But that's generally how I use this trade. And, now that my account has taken this beating right here, I might have to just go back to like kind of, grinding it out and trying to build it back up so I can take more shots, right? So I took this shot thinking that I was going to get this account to like 60, just so you guys know what I'm talking about. So like you see, like this day, basically, I took my shot and I made, basically 40,000 that month or 50,000, and I took another shot here at the beginning of the year because I thought I was going to then get it to make another 50,000, but it didn't work out, right? So sometimes people say that's a crazy way of trading. I've done it before, and where you kind of like rolled it a few times and you can make a ton, right? You just have to be correct twice. And then other times you kind of just grind along. Now, maybe the right thing is just to grind along the whole way around and not even bother with it, and that probably works for most people. For me, I almost feel like I can't help it. Like I need to, that's one thing, but I think the best way to do it is to take your shots when you see it. So so that's that. I'll keep you guys informed if I get filled. This is my favorite trade right here, VALE. This one-day trade, just because it's only 1 day. So I just have to take 1 day's worth of risk, and then I can do it. But like, look, everyone came in and probably just started unloading or something. So I don't know if I'm gonna get filled. Looks like VALE stock went down, so there's even less chance. But maybe I'll, in the end, maybe I'll do some, right? So I'll see how it goes. GM too, I like that call spread, and hoping that GM bottomed and it's going to slowly go up. So GM and VALE is what I have, and then I did this, DFC trade, and this is just kind of like a long shot, right? So I'm not like expecting this thing to come in, but when it does come in, it's gonna come in big. I had guys during 2008. I did the same thing in Schlumberger and just made a killing. And when that time comes, and back then I did it hundreds of times, maybe thousands. So when it came in, like you can make hundreds of thousands of dollars, but it's the same concept, right? So you're risking very little, but if things go wrong, whether the deal goes off or they do it for a higher price but at a later date, you have tremendous upside by owning these options. So, you know, in terms of risk reward, these are trades I love because you only risk a little, but then you have huge upside, right? So we'll see how that goes. But those are the 3 trades for today. I'm gonna start doing like earnings report. I'm having trouble getting this report right now, so I'll get that fixed, and then I'll start doing earnings report because earnings seasons are right around the corner. And then also I'll do more order flow. Like this is, in fact, the fact that I'm losing money, it's going to force me to actually rely more on the software to do the trading, and kind of piggybacking all the smart trades, right? Versus just kind of going on my own, which I do that quite a bit, but I'm, you know, the tighter it gets, I have to be more controlled. So I'm gonna do that and see how it goes, and hopefully I'll build that account back up to a certain level, like maybe back to 50, and then I can start taking my shots again, right? Which, I don't know. Maybe I'll, you know, the good thing is I actually have all this on tape, so I can maybe review it down the road after the fact, just to see whatever I said made sense or not. But you know, in terms of the software, it's basically an incredible software. Like I just got 2 really great ideas, and I didn't really, or 3 great ideas, and I got it just looking at this ticker. And this is just one part, right? So there are other guys that actually are very proficient with the software that have like their own customized scans because they're looking for certain things. And then there are other people who look at just the CAN scans, right? Because we have, you know, hundreds of scans right here, right? So earnings, like pre-earning, let's say you want to see pre-earning high volume, right? So there you go, like all these stocks that have high volume before earnings. Maybe you want to see pre-earning IV30 gain. So these 2 stocks have earnings coming up, and they have the most amount of volatility that increase. So there is like just massive amounts of scans here, and depending on what you like, you can do it. For people who like suspicious activity, well, this is a perfect one right here. It's the out of money calls on the offer, right? So you can see all these calls are trading the out of money. So like immediately the first thing that sticks out is this NVIDIA Corporation, right? NVDA. I was about to get off, but now that I found something interesting, I have to take a look. So yeah. So looks like from the scanner, all these calls traded. Right, so they're trading the 19 calls, 20 calls in April 19. You know, they're trading them in very, very high amount, right? So if you're trading NVIDIA, it's definitely of interest. But even if you weren't, the fact that they're creating all these open interests in the out of money calls, and trading all these calls, like that's like over 7-to-1. It's something to look at and to do. So for me, like nothing stands out there, so I just skip it, right? So I just keep doing that. Like Zynga, I see Zynga here. So what you can do is you can look at the scans, CAN scans, or you can actually just go with what I do is I see the prints. I see these huge prints go up, and then as soon as I see a print that I like, I'll do a trade, right? And I'll look into it, I'll see what's going on, and then you go from there. So hopefully your trading will go well. Let me know if you guys have any questions. I'm gonna try to do more video blogs, maybe in smaller segments. One maybe earnings, one order flow, and then a trading video so you guys can keep following my trading. Following how I do. So take care, and I'll talk to you guys tomorrow.